Well, we talked a lot. We talked about the sort of state of the industry, the advertising and marketing services industry, such as it is, as we approach what people increasingly say is a recession or slowing of growth. We talked about the metaverse. We talked about what marketeers and, in fact, CIOs and chief sales officers, so marketing, sales, and IT people, should think about in relation to digital marketing transformation, what they should worry about. They should worry about being agile. They should be worried about taking back control of a lot of the things they do. And they should be worried about collating and coordinating first-party data with the signals they get from the platforms. We talked a lot about what you have to do in terms of digital transformation and uniting those three areas of marketing, sales, and IT. We covered the changes in first-party data and brand privacy and consented data. So we covered a lot, actually, in a half an hour. I hope people found it decently interesting. Well, the theory would be that those people who invest in marketing in more difficult economic times, and we've had withdrawal of COVID stimulus, which stimulated everything last year, and everybody was booking their can boat on the back of that. But of course, since then, they booked the boat. We've had withdrawal of COVID stimulus, rise in interest rates, rise in inflation, the war, sadly, very sadly, and then finally lengthier COVID lockdowns in China than people anticipated. And that's really slowed the economy. So in a time of slowing down, as Mark Pritchard of Procter said in Cannes, quite rightly, time to double up. Not double down, double up. And I would agree with that. And the data, if you listen to Mark Ritson, for example, who's an academic who comments on this, if you look at the data for those companies that invest during a recession with slow growth, they come out of it faster and they do better longer term. We all know about that, but if you don't have the guts to do that, you won't get the glory. And I think human beings being what they are and organizations being what they are, the likelihood is that people will pull in their horns. That the economic uncertainty means that people won't go for the guts and glory. They'll go for the no guts and no glory, whatever the reverse is. And there'll be, we've already started to see a little bit of it. Two things have started to happen. People have gone down the funnel into more activation, which from our point of view is good news because we do a lot of that. And then there's a little bit of delay creeping into decision making. So I think what that emphasizes or points out that people are looking for results, they're looking for sales, the pressure's building, and they're thinking more carefully about what they should do and thinking about being a bit more cautious. So it's time for guts and glory, but whether people will have the guts for it is another question. Well, we look at really four things. The first is we focus totally on digital. Secondly, data drives the creation of content with the use of data and analytics in a really iterative circle. We call it the Holy Trinity model. But really, we don't see producing a film in perfect form as being the solution anymore. The fact it takes 2 or 3 months to do is part of the problem. You produce things in an imperfect form. You might produce 1.5 million executions. You might use 50 to 70,000, but you monitor how people are thinking about things and reacting. And it's like an election model without an election date. You continuously update it. The third thing is we go to market as faster, better, and more efficient. So faster is about agility. Better is about understanding the digital ecosystem, the software companies, the hardware companies, and the platforms. And then efficiency, particularly in an inflationary time, is critically important. And then finally, we have a unitary structure, one brand, and we go to market as that because we think the chaos, a lot of chaos and uncertainty and inefficiency is driven by having separate verticals. difficult enough even with one brand, but having one brand we think is the way to go. So those I think are the trends that in our industry that are really important. Energetic, frenetic, and too short.